I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link in the description box below. I've got some giveaways coming up and I'm announcing the winners of last week's giveaways. Notice anything special, by the way? That's right. Our merch is here. Email admin@KalilaRayMedia.com to get yours. Come on, let's get this money.
First up, in response to the changing needs of Caribbean investors, especially in an era of COVID-19, one new private equity entity is answering those calls: Delta Capital Partners. We'll find out more about just how they plan to offer a customized suite of alternative financing arrangements for potential investors with its executive chairman and founder Zachary Harding and group CEO Ivan Carter. And later, the analysts weigh in on the latest market developments. Jmmb Group is reporting an 83% profit when compared to the prior year. And Wigton Wind Farm's profit jumped 34% for the March 2020 financial year. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Segments of the entertainment industry are back in business after being under lockdown for months due to COVID-19. Sports bars were allowed to reopen July 21, subject to the approval of the local authorities and the acquisition of a certificate of safety. Nightclubs remain closed. However, small outdoor events have also been given the green light. Approved venues will be allowed to operate between July 21 and July 31. All events must end at least 1 hour before the start of the 11 p.m. curfew, and no more than 280 persons can gather for an event. The entertainment industry is estimated to have lost billions from COVID-19 closures. Meanwhile, the tourism industry is forecast to have declined by 85% between March and June. That's according to a report from the COVID-19 Economic Recovery Task Force tabled in Parliament last week. Border closures and economic lockdowns resulting from the COVID-19 contributed to the dramatic decline. The report says the decline in tourism, especially hotels and restaurants, is unquestionably the most significant impact on Jamaica's growth. It adds that restoring tourism to pre-COVID-19 levels of output will play a major role in helping the task force achieve economic recovery. Supreme Ventures Limited (SVL) has launched a new business hub for small and medium-sized enterprises (SMEs). The hub provides back-end office services and expertise for companies at a customized cost. CEO of Supreme Ventures Services, Dennis Chung, says plans for the hub were in train from last year as the services were already being provided in the group of companies. However, he says the idea was fast-tracked by the COVID-19 pandemic. Services that can be outsourced through the hub include human resources and administration, marketing and communication, legal, secretarial, accounting, audit, treasury management, tax planning, receivables management, information technology management, and facilities management. According to Mr. Chung, the hub will allow small businesses to focus on revenue generation. He says SMEs will only pay a monthly fee for the services, which will be priced according to the extent they are utilized. The Statistical Institute of Jamaica Statin says the population census scheduled for next April has been postponed due to COVID-19 and related budget cuts. Statin's Director General Carol Coy says $900 million has been slashed from the $927 million that was originally budgeted to undertake the census. As a result, Statin will not be able to do the major preparations previously anticipated for this fiscal year. Ms. Coy says the census would now be done in April 2022 provided funds are available. However, a pilot will still be carried out during this financial year. Meanwhile, Statin says more than 300 commodities are now included in the Consumer Price Index or inflation basket. Statin recently revised the basket based on the 2017 Household Expenditure Survey to include items such as tech devices, hair extensions, and toll fees. The items in the basket are now spread across 13 expenditure categories, up from 12. The statistical agency has also given more weight to some items to reflect shifts in consumption patterns. The new series was introduced in April. Statin revises the CPI basket every decade, with the next revision expected to be in 2027. The Bank of Jamaica BOJ intervened in the foreign exchange market for a second time this month, selling $20 million to authorized dealers and large cambio operators through its foreign exchange intervention and trading tool BFixit. Some $40 million have now been sold by the central bank in July, as a similar amount was offered on the 10th. The interventions are aimed at stabilizing the market, which continues to be under pressure despite the phased reopening of the economy. At the end of trading last week, the Jamaican dollar was selling for $146.69 to $1. And BOJ Deputy Governor Dr. Wayne Robinson is to succeed John Robinson as Senior Deputy Governor on October 1. John Robinson will leave the post he held for 7 of his over 35 years at the BOJ after his contract expires on September 30. The central bank says Dr. Wayne Robinson's appointment by Finance Minister Dr. Nigel Clark is in keeping with the recommendations of the institution's Board of Directors and the BOJ Act. Dr. Wayne Robinson has served in several capacities at the BOJ. He is currently in charge of the Research and Economic Programming Division and Financial Stability.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, Executive Chairman and Founder and Group CEO of Delta Capital Partners will join us.
Hello everybody, so this is my video on how Money Mondays JA and Taking Stock JA hosted by Khalil Reynolds has helped my financial life, really. You know, I was interested in the stock market long time, from I was about 19 years old or even before that, and I've been researching and reading and everything. I remember being on YouTube late nights trying to know about the stock market, because I said I won't be I'm not investing unless I have some knowledge and know what I'm getting myself into, you know. And I only could find foreign people on YouTube to really explain what stock is and such and so forth, but it was confusing. It was really confusing. Like 1 minute you feel like you have a grip of what it is, then the next minute they say something. It's like saying ABC, but they are saying A, C, B, right? And I remember one time I clicked on YouTube and there Khalil Reynolds' channel popped up a recommendation. The video titled before you invest in Apple, I believe the video was titled, and I watched that video, and then under that video was a video titled What is a Stock, and in that video she explained what is a stock, and then after that video there was another video that said what is a dividend and so forth, and I just clicked on her channel and I just started watching everything, and she made it seem so easy. The information was so easy to retain and follow, right? It's like I immediately became a scholar of the stock market. When I'm talking to my friends, at least they believe I was a scholar of the stock market, like I was investing for a long time. But no, in truth I only began investing early 2019. But Khalil Reynolds' channel has helped me. Money Mondays has helped me to know about the stock market and know how to invest and so forth.
This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock, and congratulations to last week's contest winner, Official JSK on Instagram. You've won a $10,000 gift certificate to invest in stocks of your choice. Contact admin@KhalilArayMedia.com to claim your prize. And for the rest of you, I'm upping the stakes. This week, you can win $20,000. Stay tuned to learn how. Now to tonight's discussion. Delta Capital Partners is a new private equity firm aiming to change the face of Caribbean alternative finance. Executive Chairman and Founder of Delta Capital Partners, Zachary Harding, and Group CEO Ivan Carter join us. Hi, Zach. Hi, Ivan.
Hi, Khalil.
Good to have you on the program. So, Delta Cap, brand new. I saw you doing some teasers in the newspaper with some artwork and kind of building the suspense around it. And now we know what it is. Delta Capital, this new company. Zach, tell me what it is. What do you do?
Delta Capital Partners was formed earlier this month as a new standalone entity, and the purpose is really to focus on private equity investments. So Stocks and Securities Limited, as you would know, has been around for nearly 40 years. We're the second oldest stock brokerage firm in Jamaica. Came out of Paul Cheney and Company days, Eagle, and then was renamed as Stocks and Securities Limited. And the focus of SSL has always been on being a stock brokerage firm and private wealth management. When I joined, one of the things that we wanted to look at is how could we expand the business, and private equity, which is something that I've been in for about 6 years prior through my own entity, Hyperion, was the direction that we saw fit. And the best way for us to do that, we figured out, was to set up our own independent company, which has two shareholders, Hugh Croskery and myself, as a 50-50 partnership, and to use that new entity to do the private equity deals on.
Where there may be a little bit of confusion is that we know SSL also does private equity. You have shares in, well, you can tell me the list of what you have shares in. So what's the difference between Delta Cap and SSL? And let me ask Ivan to jump in here.
Sure, I'm glad to be here. SSL has a venture capital entity that focuses more on startup companies, companies that may not have yet been established, or if they have been, not for a long period of time. So there's an entity within the SSL group that focuses on those types of entities. The new Delta Cap private equity firm focuses more on companies that have established track record, perhaps a couple of years of experience. They have a growth trajectory, pardon me. They are generating positive cash flows. They are scalable. They're looking for new capital, and we intend to provide new capital to them in unique ways. And apart from the actual provision of cash/capital, we will be supporting these entities, participating where necessary in their project management, their operating management, their strategic management, and helping them to, if you will, chart the course going forward. Our participation may be by way of equity, it may be by way of some form of a debt instrument, or both. So we will have a stake in the game. And that is somewhat different from what the venture capital firms and our own venture capital firm would actually do.
And the difference being that you can do either debt or equity, or the difference being that you also participate in, I don't want to say the management, but you participate actively in the company.
Yes, but also I think the main difference is the type of clients that the private equity firm targets versus the type of clients that the venture capital firm targets. As I said, venture capital is more new market entrants, new startups, relatively young companies. Private equity would focus more on established companies with a track record, with a foundation in place that we can build on. Our objective is to help these companies to grow, to participate in the growth of these companies by supporting them in various ways. And as I mentioned, not only in terms of provision of capital, but providing management services and other guidance, if you will, to them. That's kind of the difference. So it's more the stage, at which the client or the firm that we invest in is at. Are they a young, new startup? Perhaps, an entrepreneur with a fantastic idea, but has no capital and wants some capital to start their business. That is more the space of the venture capital firm. Are they an established company, perhaps with a couple of years of operating experience, generating profits, but want to scale and expand within their market or into new market segments, or for that matter, into new geographies? Or just expand their top line in terms of volumes. That is where private equity we tend to focus and where we will be focusing.
Right. So, Zach, are there specific industries that you're going to be focusing on, or is it open to anyone?
So it's relatively open, but so far we've had a number of deals that have been grouped together because of similarities. So we have one set of companies that we list on the industrials, which are companies that are typically providing infrastructure-like or industrial-like services, perhaps manufacturing or services to large entities. We have fintech. So we have about 4 or 5 deals right now that we're looking at under the fintech umbrella, financial technology. We have food and beverage, which is another area that we're looking at. We have media, which is another area that we're looking at. And we also have agro-tech or agro-processing. And to build on something that Ivan was saying in terms of the differentiation, an easy way for the viewers to understand, venture capital, we'd focus on deals between maybe 100,000 and 1 million US as an investment size. The private equity deals, you're looking at above $1 million up to 20 to 30 million US dollars per deal as a check size.
So you already are very much live. You already have a list of clients. Are you able to share with us who some of these businesses are that you're already involved in and invested in?
Right. So we have, looking at that, we have in our pipeline now. Those have been being curated over the last 9 months with the team here, as well as some of them were already in my wheelhouse as Hyperion, and we've now perfected them and gotten them to a stage where we're now ready to make the investments. The actual deals, all of them are private companies, which is kind of obvious because it's private equity.
Right.
So we wouldn't be at a stage now to disclose the names of the companies, but as soon as we close the deals, we can talk about them. There's one deal that we have closed so far. You'll be hearing an announcement about that probably next week. That's a company in America where we actually partnered with another group to acquire a 100% stake in an electronic security and surveillance company that has contracts with the US government. So they provide security for schools, hospitals, prisons. The company has been around for several years, very, very profitable business with really good margins, and have long-term offtake agreements or contracts with the government. And we're able to negotiate and get it at a really good multiple. And it also comes with some real estate. So the deals will vary, but they're in those 5 or so verticals that I mentioned earlier.
You know, this is interesting because typically when we hear about investment, you hear about maybe American investment firms investing in Jamaican companies, and now you're reversing that and investing in an American company. I was going to ask you too about how wide you're casting your net, because I notice on the board you have Dr. Justin Ram from the CDB. You have Ivan, I don't know where you're from, your accent sounds Bajan. You have people from the region. So who are you targeting? So clearly it's not just Jamaican companies that you're looking at, Ivan.
Yeah, well, we actually see ourselves, and we have pitched ourselves as a premier private equity firm in the Caribbean. So, you know, the space that we are targeting is not Jamaica only. We are stationed here, our operations are stationed here. We've had the, if you will, the fortune of being able to attract a number of Caribbean persons to the management team. Myself, I'm a Barbadian. I've worked in Jamaica for over 17 years with the Sagicor group here. So, you know, I have a very extensive, if you will, connection to all of the Caribbean islands, all 20 plus Caribbean islands. We've been able to attract some directors too, who have deep Caribbean roots in Barbados, in Trinidad. Of course, the Stocks and Securities Limited Group, they also operate in the Cayman Islands. But we have clients too who are coming to us from as far as Belize. And we see ourselves as a pan-Caribbean company. We'll be targeting and focusing on the Caribbean region. primarily. But when and if good opportunities, attractive opportunities come up beyond the Caribbean region, as the investment we've already made, we will pursue those too. So, in a way, what is happening is that we are offering investment opportunities to Jamaicans and to other investors beyond Jamaica, primarily within the Caribbean, covering a wide range of industries. But as I said, where attractive opportunities, make themselves available beyond the Caribbean, we will not hesitate to play.
You made me a little bit excited there because I'm actually from Belize. So when I hear my country mentioned, I get excited, yeah? So, okay.
Well, Belize have a lot of land, so
yes.
There's a lot that can be done in Belize.
Lots of opportunities in agriculture, in fisheries, those types of industries as well. How much money do you have available to invest if somebody is considering that, okay, maybe I need to go the private equity route in order to grow my business and get to the next level? How much might I be able to partner with Delta Cap and have invested in my business?
So in terms of capital size, there really isn't a limit because we're also working with the partners to raise capital for them. So the source of capital can either be coming from us with our proprietary cash, or we can go and raise from another institutional investor, private wealth investor, or just a traditional bank. So if you came to us now and said, hey, Delta, I have this great idea. There's a television station in Belize that I have an into, and I could acquire the station, but I need $100 million to acquire the station. It comes with some towers and a building, and it's a going concern and it's profitable. We could decide to put some of our own cash in, but then also go to the market and raise money to do the investment. So we're not really limited by a size per se, but as I mentioned before, the typical check sizes that we're looking at are between the $1 million to $20, $30 million range. Sweet spot would probably be about $5 to $10 million per deal.
Mm-hmm. Now, the other thing is that there is competition in the space now for private equity. If you guys had done this 10 years ago, I'm sure there would be a lot of excitement. Well, I'm sure there still is a lot of excitement about Delta Cap coming on board. But 10 years ago, the space was not empty, but not looking very, very good. Even 5 years ago. But coming now, you have guys like Cygnus, who's been out there. You have your Provens. You have other companies. It seems like private equity is the hot thing now. Everybody suddenly wants to offer private equity. So how do you distinguish yourselves since your potential clients now have other options? There's competition for you.
Yeah, I would say it's to our benefit. Because 10 years ago, it might have been more difficult to raise capital in the space because it was still a new industry, so to speak. And most people were just very, very fixated on collateral. Very, typical banking mentality like, oh, you want to raise money? Okay, they have a building that we can use to secure the loan. But that has all changed. Sorry. So what is happening now is the space is more open to private equity type investments. And the competitors, as you call them, we don't see them as competitors because we will work on deals with them and we'll collaborate. But what drives the industry is actually the deals. It's not really the competitors that are in the space. So the 15 deals that we have right now, nobody else has them. So we're not competing with anybody else to raise capital for these deals. These are off-market, proprietary, customized, bespoke deals that we have curated with the sponsors or with the people, with the business owners. So we're not competing with other people. We have more than enough on our plate, and I'm sure that they have more than enough on their plate too. Mm-hmm.
Now, Ivan, you wanted to add something before we continue?
I want to add to that. That was spot on. The attractiveness of our deals. But, we have some other very, how should I say, very, very strong, powerful, competitive, advantages. First of all, competition is always good. So that's a good thing. our networks, we have, apart from the professionals as part of the group, as part of the firm, we have some very strong connections, networks within the space, the financial services space, the business space, fintech, etc., etc. We all bring to the table, be it management, members of the management team, or directors bring to the table vast relationships built up over years of experience and working, within these various spaces. We have already made contact and developed alliances with other private equity firms and other experts in this space within Jamaica and beyond. And we intend to do that more than any other local player in the Jamaican market. You also have the reach that we have, as I mentioned earlier, in terms of connections, deep connections in other Caribbean territories, deep connections in the US, and even beyond those geographies. Mm-hmm. So those are some of the extra advantages, if you will, that we bring to the table: our experience, our relationships and networks, the attractiveness of the deals that we have, the quality of our management team, the quality of our board of directors, alliances with other private equity firms and experts, etc.
Well, Zach, how has COVID-19 changed the risk involved in all of this? Because you're launching at a time when the world has changed.
All right, so that's an excellent question. It hasn't changed the risk for us to the extent that the deals that we're working on are deliberately COVID-proof or pandemic-proof. So even though we are launching in a risky time, you have capital that is out there that is looking for places to be put to work. So the capital is already hungry for new deals and new opportunities. You just need to present them with the good deals. And thankfully for us, we've been working on these deals. So we show up at a time where everybody else is risk off, right? They don't want to take any risk. They're not trying to look at new opportunities. Their focus is mainly on, covering overheads and salaries, taking cash in the bank, just waiting it out. But yet we have been able to attract already capital to the table that is saying, no, we want to look for deals in this time. Now is a good time to be buying and a good time to be investing, because you're going to be able to pick up things out there for good prices. So it's actually worked to our advantage versus it being something that has caused us any sort of delay.
Thank you for joining me, Zach, Ivan. All the best with Delta Cap.
Thanks for having us.
Certainly. It was absolutely a pleasure.
All right, good stuff.
And when we come back, I've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange advanced last week with the combined index gaining 2%. 98 stocks traded across both the main and junior markets of the JSE for the week ending Friday, July 17, 2020. 38 advanced, 48 declined, and 12 stayed the same. Nearly 105 million shares changed hands on the Jamaican dollar market, totaling $873 million. Wigton Wind Farm traded the most, taking up 39% of market volume. The stock stayed the same to close last week at 78 cents. Trans-Jamaican Highway traded the second highest, with people buying and selling 10 million shares in the company. The stock lost 1 cent to close the week at $1.39. And General Accident Insurance Company JA rounded out the week as the third most traded, its stock remaining the same to start the week at $6.92. Now let's see who had the biggest gains. Jmmb Group 7.25% VR Jamaican dollar CR preference shares rose 23% to close last week at $1.58. Caribbean Cream up 21% to close last week at $3.40. And rounding out the biggest gains, AMG Packaging and Paper Company closed this week up 17% to $1.63. On the losing side now, KLE Group fell 25% to close last week at $1.35. Consolidated Bakeries Jamaica fell nearly 21% to end last week at $1.22 a share. And Kingston Properties lost nearly 19% down to $6.11. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by Senior Capital Markets Analyst at Jmmb, Simon Johnson, Research and Strategy Analyst at Sagicor Investments, Jodian Aris, and co-founder of Caribbean Value Investor and host of Beyond the Stock Price, Devrhoid Davis.
Hi, everybody. Good to have you on.
Hi, Camila. Good to be here.
So, quite a bit of, well, every time we come on, there's quite a bit of news to discuss. This week, one of the big items of news concerned JmmB's results. I see 83% increase in profit when compared to the prior year. Simon, I'm not going to ask you about Jmmb since that's your company. Let me leave Jodian and possibly Devrhoid to comment on that. So Jodian, what do you make of that?
Yes, I noticed the big jump in net profits, and when it is that you're doing equity analysis, you want to look and see what is causing that jump. And so when you look at Jmmb, two of the big ticket items for them was the acquisition of Sagicor Financial Corp shares, and so that would have been one of the items, as well as a steep decline in their tax expense. And those would have been the two ticket items that would have helped in year over year that jump that you saw in net profit. I mean, if you look at operating profit year on year, it's not as big a jump. But when you look below and you notice that they have investment in an associate, which we know is Sagicor Financial Corp shares, then we can see where that's accounted for some of the jump. And for the tax dip, it's a little bit more in relation to the fact that they seem to have earned some increase in deferred tax assets. And that would have meant that from the tax authority standpoint, means that next year they can use that to offset payments for the next financial year. However, because it is that the accounting principle is that you use a accruals method, because the offset was earned within this financial year, then they would have to show it on this year's P&L.
Devrhoid, I know you haven't been following Jmmb as much, but what do you make of what Jodian just said? So the investment in Sagicor paying off big rewards, and the tax issue.
So I don't think Jodian left off anything at all. She covered those two primary contributing factors to the big jump. The one thing I would add to it is just to look at possibly what the forward results for Jmmb might be, because if it is that this Sagicor Financial Corporation investment is now being reflected on this financial report, then quite likely we could consider it a one-off gain, and so we want to bear that in mind. And there are a few other companies that I've noticed that have a bearing on their financial statement as well.
So Wigton is another one that saw a big jump in profit. Their profit up 30% for the financial year ended March 2020. Simon, let me hear you on Wigton.
Yeah, so looking at Wigton's financial statements, it looks like a major decrease was in the finance expense. And this was due to the conversion of debt that they did, I think, in the latter part of 2018. So this was down around 50%. So if for those who don't remember, Wigton had a lot of US dollar debt, and they basically converted most of their debt before listing. And as such, they don't experience a kind of FX charge on that when converting back to US to pay off their debt. So this has saved them a lot of money. And I mean, for those who would have been following that debt issue and the potential impact on the financial statements, this shouldn't be a surprise.
You know, people are always watching Wigton. It's one of the most heavily traded stocks on the stock exchange, and for good reason. A lot of people, you know, bought into Wigton and the vision that was presented when the IPO was coming out. So, Jodian, Wigton, good news, yes?
Yes, I mean, well, in a way we saw it coming because we'd have factored it in when it is that they would have, when we're doing IPOs and we're looking at the fact that they would have restructured the debt and we'd have factored in those gains. So yes, I mean, that's good. I think in terms of Wigton, though, one of the things I like to look at is the market space in total. So whereas there is going to be increased demand for energy from renewables, the space is also becoming a little bit more competitive, and we see more companies opening up and offering to do renewables within the Caribbean. And as such, you have to look also at the market space that Wigton is operating in and how well it is that they're going to be able to hold or keep whatever market share that they currently have. Are two things that I have concerns with for Wigton.
Interesting. So, Devrhoid, do you see, given what Jodian just outlined, more competition, do you see Wigton still being in a space where it can continue to be profitable?
Profitable, yes. The scope for growth, though, is where my concern is, and I believe that's what Jodian was alluding to. In their last filing, they also mentioned, they actually raised this concern, being that the coronavirus pandemic has actually kind of stunted some of their plans for expansion within the broader Caribbean. So it is, I think they are cognizant of the fact that they are operating within a space that requires them to be a bit more aggressive in terms of their growth plans, but they seemingly are also cognizant of the fact that they are operating within a competitive space. And we have to remember that there is still MPC, clean energy, that's operating within the same space and even within the same markets as Wigton. So we just have to consider those things as well, I think.
I was gonna say, I don't think MPC does win. They do solar, right? But it really doesn't matter. It's still competition. It's still renewables.
And Khalila, if I may, I just wanted to balance out what's being said here, because I mean there is some concern about the future prospects of Wigton, particularly related to one of their phases. I don't remember which one. I think it's phase one.
Phase one, yeah.
Yes.
Yes, phase one that should come upon its useful life in 2024. But they have a possible 6-year extension, so that is something that investors should be looking out for. So that's about 4 years from now. But what I wanted to mention, to Jodian's point, is that utility stocks such as Wigton can also be seen as defensive, meaning that even in these times of economic downturn, people still need utilities, still need to use your electricity. And based on the agreement that Wigton has with JPS, the take or pay agreement, JPS agrees to take and pay for what Wigton produces. So the last traded price today was probably around 79 or 80 cents. It was trading at a PE at about 13 times. This may seem fair if you balance off what Jodian and Devrhoid have said compared to the defensiveness of the stock.
I see. So, Jodian, another hot stock this past week was Creamy. You see where the circuit breaker was triggered for Creamy. Why was that?
So I think Wednesday, Creamy would have posted some results and they would have indicated that I think profit was up, but they had revenue up as well. And I think part of the surprise is the type of product that it is. So traditionally during a recessionary or economic downturn period, you don't expect to see what you consider to be consumer discretionary type goods performing as they would have done. And as such, I think that was a big surprise to the market, and as such, persons would have reacted to that news. I think though, and so to balance it out, even though it is that they saw increased revenue for this quarter, you have to also consider that we're within a particular space. So it could mean that because I was in a lockdown and that company has a better distribution mechanism, then it was easier for me to get ice cream. And when it is that the company or the countries open up, then I may just return to my usual source for ice cream. So I don't want you to see it as possibly that this is something that is now that they're going to continue on this trend. It could just be in relation to the one-off nature of what is happening in relation to COVID. But it was a bit of a surprise, and they cited that they found persons were consuming more comfort food during a period such as a global pandemic.
Yes.
Which is not normal to what we're used to seeing happening for items within the consumer discretionary space.
Some news that came out last week too, Barita had their AGM and their shareholders voted in favor of having that additional public offer, the APO. So Barita's APO is a go. Devrhoid, what are your thoughts?
In terms of Barita, I actually anticipated that shareholders would have actually approved the resolution for the APO. Another thing I anticipated was the price range of the additional public offer. So the anticipated price range is between $48 and $53 per share, and they're seeking to raise between, well, on the low end about 9.6 million, and on the high end, if they consider an upsize, they could raise as much as between 14 and 16 million.
Wow.
Billion.
Billion, yeah.
Yeah, so that would actually make them that would be the highest amount of capital raised within the market in recent history, and probably in
it would be. Trans was how much? Trans Jamaica was
11 billion. So being as they're seeking to raise between 14 and 16 billion, if they don't upsize, it will be between 9 billion. The interesting thing to me about Barita is that they currently have around $17 billion in cash and cash equivalents. So it's rather interesting to me to hear what they are planning to do with this series of capital that they're going to be raising from the market. And we haven't had any idea outside of them saying that they intend to create two new. So it's that's really anticipating their
New Kingston and
for the APO.
Opening in New Kingston and Montego Bay is not going to cost $30 billion because the 17 they already have, plus the up to 14 that they're going to raise. They have something up their sleeve. Simon, do you have any inkling what it might be?
I'm not sure, but what I can say is that within an environment, a recessionary environment, there is no better thing to have than $30 billion.
I agree.
The company will be well positioned to make any form of mergers / acquisitions that they have. I've been looking at Barita since Barita was just Barita around the corner of New Kingston when it was trading sub 10, and now Barita went up as high as in the 80s and now it's in the 50s. So it's really come a far way since Cornerstone has taken over, and I think that an expansion of the Barita network is definitely in the works, but I'm not sure exactly what they're going to do.
The thing about Barita is that their current total assets are around 48 billion. So if they raise, and again 17 billion of that is cash, so it should be interesting to see what they really plan to do with around the same 75% of their capital in cash.
What I would say, Devrhoid, is and as I said, based on where I am, where I sit in the market, in the capital markets, I may know some things that I can't mention.
All right.
Publicly, but I would say look on the broader group, the Cornerstone group,
Gotcha.
and where Cornerstone wants to take all of their subsidiary companies. Just remember that Cornerstone has a commercial banking license.
Right, and they also have the investment banking arm which recently launched, no?
Yeah, so I mean, that's all I can say. That's all I can say publicly, really.
So what else is in the market and see what it is that they're missing, and that could possibly link it to what it is that they could be doing. But they're definitely coming to companies. So what it is that they don't have, they're going to, I guess, use this fund to acquire.
Well, thank you for joining me, Simon, Jodian, Devrhoid. Always a pleasure.
All right, thanks, Kalila.
Okay, no problem.
Awesome.
All right, thanks, Kalila.
Let's take our final break. When we come back, I have those giveaways. This segment of Taking Stock, The Analyst, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also, subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my features. The goal is to get to 50,000 subscribers. We want to help people learn more about money so we can all get this money together. Well, this week on Money Mondays JA, I take a look at Pulse Investments and why it was June's hottest stock. And on Money Moves JA with Jmmb, we learn some more ways to get your business paid electronically without a credit card or a website. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Time now for tonight's t-shirt giveaway. You can win one of these Let's Get This Money shirts simply by answering the following question. On last week's episode of Taking Stock, how much money did Edufocal CEO Gordon Swaby say they're going to save each year by going officeless? See, if you're subscribed to the newsletter, you can find the answer really easily. Leave your answer in the comments. You have until Friday, July 25 to answer. The winner will be chosen at random and announced in next week's show. Congratulations to last week's winner, Gordon Allen. Gordon, you can email admin@kalilaraymedia.com to claim your prize. Also, guys, I'm upping the ante this week. Post your videos stating how Money Mondays JA or Taking Stock has impacted your investment journey, and you could win a $20,000 gift certificate to invest in stocks of your choice. Post your videos on Instagram and tag me at Kalila Ray as well as at Taking Stock JA, and you could be featured in an upcoming episode of the show and win some cash money. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.